Whether you are a pro at talking to clients or you have never talked to a client before, this video is for you. We can all use help in speaking with customers. In today's lesson, we are going to talk about, I'm going to share with you talking to borrowers and give you examples about that. So I'll give you exact phrasing, what to do when your clients push back. So that way you can stay on track and stay focused on closing loans on time. This is specifically a part of our conditions series, where we talk about handling conditions and understanding that. So before you call the client, engage with the client, and I always recommend that you call the client and talk to them about the conditions, or you could do a Zoom if that's their preference, but talk to them one-on-one about the conditions before you send an email. Now, after that first conversation, if there's just one-offs here and there, then you could probably follow up with email. But when you get that conditional loan approval, you want to reach out to them, email, call, or text and say, hey, do you have 5-10 minutes where we can go over your conditional loan approval? So before you get on that call with them, make sure you've organized a list of what is being requested. What I like to do is I go ahead and prepare the email that I'm going to send after the call. So I type up an email, I make a list of all of the conditions that I'm going to request from the borrower, and then I go over the phone. So that way when I'm done with the phone call, I'll say, hey, I will follow up with you via email to recap this phone call. Make sure you understand the conditions. So you make sure you understand what's being asked. So that way, if the customer has a question, you can answer that for them. You may want to have some ideas on how things get resolved. There are times when you have a condition and the customer is like, what am I supposed to do? I don't know how to solve that. And you can offer them a suggestion. So you can say, this is what clients have done in the past, or this is something that you could do. So for example, if you have a customer who maybe there is a mortgage that reports on their credit report, but they don't actually pay that mortgage. They co-sign for someone, a family member, and that family member is the one that makes the mortgage payment. So typically you would need 12 months proof that someone else pays the mortgage. And I actually had this question the other day, and someone said, how would I prove that? How would I prove that someone else pays the mortgage? So I have to dig a little bit deeper and say, well, how do they pay for the mortgage? Do they have like a checking account where they have an auto debit every month? Do they write checks? They said, oh, I'm not sure. So we'll reach out to them and see if you can get 12 months of canceled checks or maybe bank statements, something that shows that they made those payments to the mortgage company from their account and not from your account. So sometimes you have to walk through it with them and give them ideas. I have had people say, I get auto debit to my bank account for my pay. I never get pay stubs. I've never looked at a pay stub. I don't know where to get it. So you may want to talk them through it and say, hey, if you have an HR company, HR department or a payroll department, you could call them and say, hey, I need to get pay stubs for whatever, for personal reasons or for a mortgage. Can you direct me on how to download my pay stubs, or can you send me copies of my pay stubs? So some people don't know even how to get copies of their pay stubs. So you may need to walk them through how to do that. That's fine. And at the end of the day, sometimes you have to put your foot down and put the ownership on the client. You can't necessarily do everything for them. So if they say, oh, I don't know how to do something, and you've given them instructions, you say, okay, you need to call your HR department. You need to call the payroll company and put that ownership on them, and then have clear due dates. In order to stay on time for closing, you could say that to the client. Hey, in order to stay on time for your closing, we need all these items back in 24 hours. Or if they need a little bit more time, hey, within 48 hours. Or they may tell you, hey, I won't have that pay stub until next week. Okay, that's fine. Is it going to be on Monday or Wednesday of next week? So that way I can put it in my calendar and follow up with you. So make sure you have a clear deadline for them, so they know when to turn things back. And people like that too. They say, oh, when do I need to have this back? And you could put that in an email as well, is when those things are due. I talk a lot about proactivity, and that includes asking for standard things at the start. If you ask for standard conditions from the very beginning, it'll make things easier. And when you receive your conditional loan approval, you'll have less items on that list. So this is an idea of just some standard conditions. You always have your initial disclosures. You're always going to need a government ID. So when you're setting up the file before you even turn it into underwriting or turn it into the processor, I suggest asking for some of these. Now, initial disclosures you can't ask for until they're generated by the lender or by your disclosure department. But government ID, you can always ask for a valid driver's license or valid passport, something that's not expired. That way, if you're asking it at the beginning and they say, oh, I have an expired ID, I forgot, I need to go to the DMV. So you need to get that going so that we have an actual active current ID. Or if you have a passport, we can use that if you don't have your driver's license updated. And then letters of explanation. And I put the abbreviations here that you'll sometimes see in the industry. So sometimes people put letters of, or LOE, standing for letters of explanation, or sometimes people put LOX, standing for letters of explanation. So if you see that maybe on a conditional loan approval or a processor types that in an email, that's what it means in case you're not sure. That includes credit, did I just say credit inquiries, which you should see on almost every file. So it's always best to get a credit inquiry, goodness gracious, can't even talk. Get a credit inquiry letter that explains why credit was run, whether it's why you ran it yourself, or if they have other people that ran their credit, maybe they were shopping for mortgages. That makes sense. They were shopping for mortgages or different interest rates. But it also lets you know if they got any other credit, any other debt. So you want to ask them, hey, I saw that, Toyota ran your credit. Did you get a new car? If so, we need to know what your car payment is going to be because we have to add that to your debt to income ratio. So that's the reason why. So asking these things in the very beginning that are standard conditions, that'll just save you time later. Insurance, you always need insurance, whether it's a refinance or you're buying a house. So you'll need to, if they're buying a house, hey, congratulations, you got your offer accepted. That's so awesome. Now we got to start shopping for insurance. So ask them for an insurance quote if they are buying a house, and if they already own the house, ask them for their current proof of insurance. And you don't need the entire policy. You just need the declaration page that shows the annual premium and the coverage. So you could tell the customer, hey, I just need the page that shows your coverage and what your annual premium is. If you say declaration page, they may or may not know what that is. And if you abbreviate it, like when my mother was going through financing, someone put DEC page, and she said, what do they mean by the December insurance statement? I just pay once a year. So make sure that you are clear with your customers. And then normally you have to verify employment. So even if they work for themselves. So you could cover that at the very beginning. We always need to verify employment. Now, if you're retired, the verification is normally like your Social Security letter or your pension letter. If you're working for a company, then we'll need the name or department of who we should contact so that we can verify that you're working, or so the lender can verify that you're working. So you want to ask them from the beginning. Is there a person we should contact? Can I get their name, their phone number, their email? Or if there's a department, do they have an 800 number? Do they have something online? For example, it could be on a system called the Work Number, where we order a verification online. So ask that from the customer upfront. Standard items are income, assets. So that would be pay stubs, W-2s, tax returns, bank statements. These are standard things that you pretty much need on every type of loan, unless they're getting a no income document loan. If they're getting pre-approved, or you haven't yet started the loan, or it's the very beginning stages and the loan officer hasn't yet decided what kind of loan they're getting, you may want to still ask for these things. Say, we need your pay stubs, your tax returns, we need your bank statements. And they may say, my tax returns don't show very much money. I don't think I'm going to qualify. I don't really want to show my tax returns. And you can assure them the loan officer is going to review everything and decide what type of loan they should give you. So if you want to show your tax returns, that shows other parts of the story. It shows whether you have a business, whether you don't have a business, if you have any other properties, you don't have properties, you have dependents that you're responsible for. So tax returns show more than just how much you're making. So we would love to get a copy of those. Here's some not so standard conditions where the conversation may be a little more challenging. Things that are asset related, having to do with their bank statements. So large deposits. That can be a challenge. Sometimes people push back and they say, I don't understand why you're digging so much just because I deposited $20,000 in my account. There's normally certain thresholds or rules about what is considered a large deposit. In most cases, it's double their monthly income. So if they make $10,000 a month and they deposited $20,000 or $25,000, the underwriter most likely is going to say, we need to source that large deposit. So they have to explain what that is. And it could be they got a gift. So then we could go into gift documentation. It could be they got a bonus. Okay, great. We should be able to verify that with your employer, or if you have a pay stub that shows that you got a $25,000 bonus, perfect. If it was transferred from another bank account, okay, great. We just need the bank statement from that bank account showing that you transferred money, $25,000 into this bank account. I've seen recently people get insurance settlements. So they were in a car accident, they got some kind of insurance settlement. Okay, great. We just need, I'm sure you got some kind of paperwork with that, a letter from the insurance company or a copy of the check. When people are still a little bit agitated or push back on this, I share with them that part of tracing large deposit does have to do with government security. So there are, things that may have occurred or are red flags of things that may occur in the country that could be unsafe if people are transferring money, large amounts of money. And that could be, we even saw that with, 9/11, and there have been maybe fraudulent activity where people are exchanging large amounts of money. So that's the reason why, that's one of the reasons why. And so when you share with someone, hey, this is for you, basically your protection, as someone that's here in the States. And so that's why we're asking for it. And normally that kind of decompresses the, any kind of agitation. And then gift fund documentation, and then terms of withdrawal. Or again, you might see this abbreviated TOWs. Terms of withdrawal is from your 401k. These are, large deposits, gifts is coming from like a gift donor. So maybe a parent, grandparent, relative is gifting money to someone so they could buy a house. And then terms of withdrawal is typically from like your 401k, IRA, something like that. Not so standard condition CPA letters. Typically, we do see that when you're self-employed, but you also may see it if there is something on the tax returns that is hard to explain. We can, give the underwriter that explanation. And then for someone that works for themselves, sometimes the CPA is the one that does their verification of employment. So they say, oh, they've been in business, for 8 years. I've done their taxes for the last 5. I can verify that they own their own business. They're 100% owner. We have the real estate owned. So if they own other real estate besides the one you're doing the transaction for, or even the one you're doing the transaction for, we typically need their mortgage statement, which includes mortgage rating. So what a mortgage rating is, on their credit report, the credit report shows they have made their mortgage payments on time for the last so many months, and it's current, and this is the mortgage payment. As you are processing the loan, 1 or 2 months may go by. The underwriter wants to confirm, is the information on the credit report still valid? So are they still current? Have they made their payments on time while we were processing the loan? So you'll either need a credit verification or some additional statements to show. PITIA, that stands for principal, interest, taxes, insurance, and assessments. So principal and interest, you normally get that from the mortgage statement. That's how you'll document that. Taxes, a lot of counties across the country, you can pull the tax bill directly from the county tax website. So that might be a way you could do it. or sometimes you can pull what's called a property profile, and your title company can help you with that, or your title company can give you what's called a tax certification, and that'll tell you what their taxes are. But if it's a property that you are not doing the transaction for, you may have to ask the customer for a tax bill. And then the insurance, so we talked about that, getting the insurance documents on all the properties they own, not just the one that we're doing the loan for. And then verification of rent. That's another condition that's not so standard, that sometimes you have to walk your customer through, because it is verifying that they've paid their rent on time. So if they are buying a home and if they're currently a renter, because we can't get a mortgage rating from them, the underwriter may ask for a rental rating. So their landlord or the property management company would have to either fill out a form or provide history that they have paid their rent on time for the last 1 to 2 years. When the condition is really challenging, there may be some difficult conversations. I recommend, if you're first starting out, you may want to talk that out with your loan officer. It may be a conversation the loan officer needs to have with the customer and not necessarily you as the assistant. But once you are used to talking to customers, you can even handle the challenging, unique conditions. Remember that whether someone's refinancing or buying a home, it becomes a very emotional process. Sometimes people are sensitive and they get maybe offended, or you are asking for something that's kind of uncomfortable. And we are dealing with hundreds of thousands or maybe millions of dollars. So the things that we ask for is for the protection of the lender, maybe for the protection of the customer, it may be for the protection of the seller or maybe the investor. So lots of different people need, or entities need, protection during a transaction. And so that's why some things are requested. Here are kind of a few examples I can give you. I had a customer, we were doing a refinance, and the property was inherited by the mother. The adult sister was helping to facilitate the transaction, and the relative that had passed away, they unalived themselves. So unfortunately, we did need a death certificate because the title was still in the deceased person's name. We did have all of the paperwork and the trust paperwork showing that it had that the beneficiary was the mother. It was a sensitive matter. So in speaking with the family and saying I have to get a copy of the death certificate, they were, you really have to show sensitivity and empathy during that time. They did not want the cause of death to be in the file. That was kind of irrelevant anyway. But the unredacted death certificate did have to get to the title company so that they could do what they need to do. But for the lender, they don't really need to see, all of the details. So that's one circumstance where it's very unique. Also, if there is the process of a divorce and two people are, splitting up their assets, they may need to refinance in order to do that. They may not necessarily get along. And so you may have to speak with them separately. You may have to speak to an attorney or financial person that's involved in the transaction. And that can also be challenging. So just remember, it's still a human business. And that's actually what I like about it. And you're dealing with a human on the other end. So just be very sensitive. If there are certain conditions that are unique, they're challenging, it may cause the person stress or emotions. And, and it feels like we are prying into their personal life. So if you call them and say, hey, I need this certain item, and they're like, you guys are really getting into my business. You as the loan officer assistant or the loan officer, you kind of have to be like a little bit clinical. Like, okay, I'm sort of like a doctor and this is what I need. But at the same time, be empathetic or sympathetic when you can in certain circumstances. Closing conditions is another time when you really should get on the phone with the customer before they close. So if you're talking on the phone, kind of pre-loan with the customer, then you're talking again during conditional loan approval. this would be another opportunity to get on the phone with them if you can. So other times you may just be corresponding through email, text message, that sort of thing. But closing conditions, you want to make sure that nothing falls through the cracks where we cannot close because you didn't cover something with the client. So things like final inspection reports. So if it's a refinance and they had to fix something on the house before we can close, we need to make sure they know that too. Even on a purchase, final inspection reports are normally handled by the real estate agent where something may need to be fixed because your customer doesn't yet own the property. Those are some things. Payoff statements. So if you're doing a refinance and we are paying off another loan, we need to make sure that that is current, and explaining to the customer, especially if it's in the time where like their mortgage payment is due, but we might close before they have to pay it. They are responsible for making sure their mortgage payment is done on time. So if you're right at the cusp, you want to tell them, hey, it is your responsibility to make sure that you pay your mortgage on time. Although we are going to try to close the transaction before your mortgage is due. But if for whatever reason it doesn't close on time, you are responsible. If you overpay, you'll end up getting that money back. But, we need to make sure that we cover that. And any cash required to close. So whether that be down payment, closing costs, anything they have to bring for closing, you need to make sure that they are bringing the money from a source that the lender has already verified. I just had this conversation yesterday. I said, okay, we are going to be closing next week. Please make sure that your final down payment is wired from one of the bank accounts that the underwriter has already verified. She said, well, which ones have you already verified? I have a lot of bank accounts. I'm like, oh no. So I started reading off to her the bank accounts we had. And she said, I'm not sending my down payment from any of those bank accounts. So we had to walk through, okay, you're going to need to make sure that you're transferring money into one of the bank accounts that we have already verified. And that's where you send your wire from. Any documentation expiration dates, and we've talked about this before. If their pay stubs are going to expire, the credit report's going to expire, something is going to have an expiration date, you want to remind the customer, hey, we need to close by this date. It could be their lock. Hey, your lock is going to expire on the 10th. So if we don't close by then, we're going to need to extend, and that could cost you fees. Maximum credits. So maximum credits from either the seller or the real estate agent, anyone that's giving them credit towards their closing costs for buying a house, there are maximums. So you want to make sure that no one is exceeding that. And then I talked about this in another video, but a new job pay stub. So that's typically not at closing, post-closing, but it might be at closing. I had one where the underwriter said, I'm not closing until I see their first paycheck from their new job. And so you need to remind the customer, hey, you need to get that paycheck or else we cannot close. And if it's post-closing, or any of these are post-closing, you want to cover that with them even while you're going over the closing conditions, because people are going to forget, and you want to make sure, hey, we have this conversation, and then once the loan closes, you can call them and say, remember, we had this conversation. I'm just going over it with you again. We talked a little bit about this earlier, handling conflict. And like I said, it can be an emotional experience, especially for the client. So be more of a listener than a talker, especially when they are upset. You can even ask them, hey, how are we feeling today? I had the conversation a couple days ago where someone said, I feel overwhelmed. Okay. So we can acknowledge that and talk about what makes them feel overwhelmed and try to, really hear what they're saying and address anything that we can. Repeat back what you hear. So if they're upset with something, I am offended. I told the loan officer I was not going to provide any information. Just say, hey, okay, so what I'm hearing is you had this conversation with the loan officer that you weren't going to provide certain information. So I will circle back with them and make sure that your concerns are addressed. Repeat back what they say. That normally will kind of de-escalate them because they're like, oh, someone heard me. Great. So listen to what they're saying, repeat back what you hear, validate any concerns they have, try to use a calm voice, even if they are agitated or if their volume is getting higher, Now, if someone is being abusive, so if they're yelling or if they're using curse words, if they are insulting you, you can kindly say, hey, I think that we should arrange another time to chat. I'm going to circle back with the loan officer. Or if you're the loan officer, say, hey, let's reschedule when, we're in a calmer state, and we can address all your concerns at that time. If you want to send me kind of a list of everything that's bothering you or concerning you right now, then we can get on a call and address that. So use a really calm voice when you're speaking to them. Now, agitated and upset clients, I will say I received this advice when I was newer to the business. Don't say I'm sorry. So don't say, oh, I'm sorry we didn't get something done on time. I'm sorry that you have to provide this condition. Don't say that phrase. Don't say I'm sorry. You can say things like, oh, it's unfortunate that you feel that way. Unfortunately, the underwriter needs that document. Just don't say I'm sorry. It's just because when they hear that, they're like, it's their fault. Tressa said I'm sorry. It must be her fault then. I just wouldn't say I'm sorry. It's different when someone is sharing a personal story and maybe they did have like an accident or recent death in the family. You want to say, hey, I'm sorry for your loss, or I'm sorry that happened to you. So I would just say, this is unfortunate, or I recognize that you are disappointed. Here is where we are, and this is where we need to be, or this is how we are going to get to the end result. So they're like, I'm so upset, I'm so mad. Yes, I recognize that. I understand where you are coming from. All right, so now let's move on to the condition. So we've just got to sometimes be kind of clinical, and sometimes we can offer empathy, but just be careful with your words. And then commit to that follow-up. Say, hey, your concerns are valid, sir. I'm going to circle back with you within 24 hours and address those concerns and see how we can get that resolved for you. And just remember, if someone is being abusive, you do not have to take it. Put your foot down and say, it is unfortunate, sir, that you are upset. I want to get this resolved for you. So in order to do that, I need to jump off the line, and someone will get back to you. That's it. Thank you so much for joining me. I know it can be challenging talking to customers, and sometimes it can be a little bit intimidating or scary, but the more that you practice doing it, it becomes like kind of muscle memory. And I couldn't go over absolutely every scenario. There's always these unique scenarios, and that's, again, why I love being in the human business. So if you need help with this, you can reach out to me and say, hey, I have this weird scenario where I was not sure what to say. The customer said this, this, and this, or I have this really weird condition and I am not sure how I'm going to even talk to the customer about it. You can certainly reach out to me. I'd love to help you with that. One other thing that I was thinking about was if a customer is asking about figures. So if they're asking about figures, fees, interest rates, and you are not licensed or not yet licensed, don't say I'm not licensed. Just say I don't have the licensing for that conversation, or I don't have the licensing to, and so it doesn't necessarily mean that you're not licensed, although you aren't, but it's like you don't have that particular license. So that gives the customer just assurance that, okay, I'm still speaking with like a competent person. They just don't have the proper licensing for this conversation. And so that's what I would recommend there. And I really appreciate those of you that have liked, subscribed, dropped comments. It really helps me to understand what information that you need so that I can make more content and videos for you. So, all right, I appreciate you. Take care.